So thank you so much. Thank you very much for inviting us to this very interesting conference. So my name is Dr. Jacob Schmidt. I'm an academic, and I'm also a wealth management practitioner in that I sit on the investment committee of a wealth management firm, NLPFM. We run around 1.2 billion in assets, very similar, I think, to one of the other speakers on the panel. So I've had a very great interest in wealth management, both from an academic point of view, where I teach wealth management, also teach entrepreneurship and technology in FinTech. So that's very close to my heart. And of course, as a practitioner, technology is very important to us. We are not yet there. We still use a lot of paper. And the other day, I went into the office of one of the partners of the firm, and I said, your office looks like an office in the 1980s. It's full of paper. And he laughed, because he's still printing lots of reports and so on, even though we have apps for a lot of technology and so on. So I think there is still something to learn. And if you think about it, it's COP26, and we still produce all this paper, not here. And that's amazing here that we have this technology connecting, having information, and so on. So without any further ado, I would like to invite now the panelists, very esteemed people here on the podium. First, perhaps we start with the ladies. Cara Williams of Mercer. Cara, welcome. Then we have Muriel Danis, I hope I pronounced it properly, of HSBC Private Banking. And then Phil Patient of HFMC. Complicated like NLPFM.
Not to be confused with HMRC.
Exactly. So what I would like to do is, I think it's always better to ask people to introduce themselves, because you always make mistakes. Either you say the wrong thing or you say too much. So perhaps we start with Cara. If you could just tell us a few words about what you do within Mercer. Of course, we know what Mercer does, who Mercer is. And then perhaps a little bit of an opening of your perspective with regards to wealth management, wealth tech, the technology side of wealth management.
Sure, thanks. So my name's Cara Williams. I'm with Mercer, and I've been there 16 years, and I'm global head of wealth management, which means we work with financial intermediaries and family offices, primarily on investments, so investment due diligence, operational due diligence, helping them sort through best ways to build portfolios for their clients. I guess as far as wealth tech goes, I mean, we have the luxury of working with some of the largest as well as some of the smallest wealth managers around the globe. And it's been really interesting to see, certainly over the last 16 years, the fits and starts and people trying to implement, as was mentioned earlier, going robo, then pulling back, and then trying to figure out what the right hybrid is and not figuring that out right. So I think we're starting to see people get a better understanding of what it is that they want to do and what it needs to look like. But I haven't really seen a truly successful model yet. I'm sure HSBC will knock our socks off. Yeah, so that's sort of my view.
Thank you very much. Perhaps over to you,
yes,
Muriel.
Good morning, everyone. So I'm the Global Chief Operating Officer of the Investments and Product Group of HSBC Private Banking and Wealth. I've been with HSBC for 10 years. My teams own the product management and product development cycle of the business. And actually, a big part of the job has been around the digitalization of our product proposition, investment services, underpinning investment processes. So wealth tech has become a very important part of our agenda. Obviously, it had started before COVID, but COVID has accelerated the trend. And the process of digitalizing the way we engage with our customers, provide advisory services, investment services, has become a key part of what we're focused on and what my team in particular is driving.
Thank you so much. Over to you, Phil. You work for a wealth management firm / IFA, so a different perspective, a little bit similar to perhaps what I do with my other hat on, not the academic one. You want to tell us a little bit about yourself and then the firm and perhaps what you think about where you see yourself at the moment?
Absolutely. Thank you. So I guess my background comes similarly actually from some of my colleagues, originally private banking. So I was head of wealth planning for C. Hoare & Co. oldest UK private bank in the UK. Also then working for Stonehage Fleming, which is largest family office in the EMEA region, and now on the distribution side again, IFA, as you say, with HFMC Wealth. So now looking at it really as a distributor, and responsibility for me as Group COO is very much around the wealth proposition, the advice proposition, and then the back office streamlining really both advice and how we ultimately interact with the product, I suppose, at the end of it, where a product is appropriate rather than just advice. So a lot of my time, certainly over the last 18 months, has been in COVID, as we all have, trying to work out how you still keep things fluid for a client so the experience remains what they would want it to be, and really trying to get a lot of the product providers to play catch up.
Thank you very much. So perhaps we go into the first topic. We discussed yesterday a little bit of what we want to discuss here with you, and of course I forgot to mention here that the way you ask questions here is you go to the Brella app, you go to the bottom toolbar, you click three dots, and then you ask your question, and hopefully we can answer it then later. So coming back to this discussion here about, you mentioned COVID-19, last 18 to 24 months have been very difficult for most of us, I think personally, but also professionally. How do you see what has changed in industry, and how has that affected you? Perhaps we start now with you.
Sure. I think there's the obvious, which is the world of streaming, video conferencing, Zoom, Teams, and having to work completely differently from just being used to sitting in a face-to-face office. But I think it's gone beyond that now. We obviously have to work out how to hybrid work, and also look at how we interact with clients. And I think the way that clients are wanting now to deal with us has already changed. So where you used to have your trusted advisor relationship certainly sitting face-to-face across from the client, now I would suggest maybe 3 out of every 4 meetings is virtual. And certainly there have been, I think, Harvard studies saying that if you keep that sort of relationship of 1 out of every 4 meetings you're having with your client being face-to-face, then I think then there's a degradation of your client relationship of around 3-4%. So that will keep your efficiency there. So I think there's a lot of concern about simply going virtual, but there's huge efficiencies in there too. And I think a lot of clients have welcomed it. But there has also been a real change at the same time in how people want to interact with you. So as firms, I think we need to be more open, really, in to say it's not just face-to-face, it's not by this email or this app that I have designed for me and my business. You know, if I talk to my children, they want to use WhatsApp, they want to use all sorts of other different methods of interacting with us. And part of the journey has been understanding that that's how they want to interact and working our systems and back offices to work with that, I think.
Yes, I would agree completely. The model of interaction with customers have shifted very much so. I think the hybrid model is going to settle. In a private banking context, the face-to-face interaction remains important, but we're definitely shifting into a more hybrid model. Also interesting to see how it evolves across the segments. I was talking to one of our bankers earlier this week, and he was saying, as an example, family offices almost no longer interact on a face-to-face basis. They take virtual meetings primarily, and they see that continuing. So I think the interaction, the engagement model is going to settle down. We'll continue to see face-to-face. The hybrid model, I think, will prevail, in particular in the private banking space, but no doubt that we're now in a very different territory. What has been very interesting for me as well in the context of COVID is, of course, the wealth digital trend was underway much before COVID, but COVID has really played a catalyst with respect to accelerating the trend. And that has led really to an intensification of the expression of client needs and preferences. It has led to greater investments, and we've seen it in the introductions. And it also has really led to an accelerated pace of change. And I think that's something that has been very, very palatable in the last 18 months, 24 months, and that catalyst effect of COVID.
Yeah, I think to the original introduction that we heard, one thing that we've seen a lot of is, I think over the last 18 months, is not in a negative sense, but a lot more navel gazing, where firms have taken it as an opportunity to look at their structure. How are they organized? How are they working with their clients? And how can they improve that? And obviously, there's the impetus of where it's not going to be quite as much face to face. So yes, need to be creating better client portals and interaction. But it's also, I think, there's been a lot of infrastructure analysis and how can we better align our business with where we're going in the future, and how do we enjoy better margins going forward? Because typically, wealth management is obviously a really hard business, and margins are pretty small given the amount of high touch requirement in this space. So I think the number of deals that we've seen happening is not a surprise at all, because a lot of firms have been cleaning themselves up, getting themselves ready to be acquired, or getting themselves ready for VC or just some sort of capital influx. And you see a lot of acquirers really looking at their cash and saying, okay, how can we better implement and use this cash that we have, again, to better align ourselves with the future and where we want our business to go. So it's been a really active time, but quite an internal time, I think, for a lot of firms.
I think if I can just follow up on one of those points, was the other thing that I think we've seen is the start of real democratization of wealth. So certainly for us, we deal with high and ultra high net worth clients. And what COVID has done is it's accelerated the transfer of wealth. I think that we've all started, all talked about for so long, with all the baby boomers holding the wealth and saying, well, I'm going to pass it on to the next generation, but when and how? And what we have had those conversations now. It has meant that we are now engaging with those next generations, and the wealth transfer has begun from our perspective. But it does mean we are now having to deal with a different group of clients who want to be dealt with a completely different way. And it's interesting about the conversation you make, Jacob, about paper. So for us, paper has disappeared with those sorts of clients. They don't want paper, and the days of having to read, the brochure that people used to proudly produce. I mean, they're just not going to read that stuff half the time. And I've had people say that, saying, where's your podcast? Where's your video message? Where are these things? So the way we actually reach out to our clients and prospects has changed. And I think because of that, data has become really, really important. And when I say data, I mean clean data you can look at and segment and really understand your client from the data and get insight, because data for the sake of data means nothing, right? It's all about insight, what you can actually glean from capturing all of that data, because without that you can't hyper-personalize your message. And there is no value, I think, in us going and seeing a client and talking about some topic, coming to a decision with that client, and then my central marketing team sending out something that cuts right across that 2 minutes after they've left the meeting, because then you don't know your customer, then you're just a sausage machine. And you can't do that, certainly not in the high net worth space, and expect to maintain relationships and effectiveness. So I'd say data's even more important than it ever was.
Definitely. So the UK is a very large market. It's probably the second largest after Switzerland. So it's a very important market, but very fragmented. So we have, as you mentioned, there's a consolidation going on. There's lots of transactions going on. But there are also trends in terms of how to use technology, or how to use data. You mentioned data here. I think that's a big challenge for many of us, because you have so many different systems. I saw, Muriel, you wrote a paper most recently in the Journal of Digital Banking about how you use Aladdin on the wealth management side and incorporate that and so on. And we all know that we have different systems. We have onboarding systems, we have asset management systems, we have risk profiling systems and so on. And what's the connectivity? So where do you see the trends going there? Is there of course for the private banks, there is a different set because you do it in-house. I think on the other end, on the smaller end, we tend to buy things in, and there are very good offerings out there, but they're still quite fragmented and so on. How do you see, perhaps we kick off with you, with your kind of paper and the research you've done within HSBC, and then...
Yeah, I mean, it's for an organization such as ours, it is by far the biggest challenge. So creating a seamless digital client experience, and actually user experience as well for advisors, across what is somewhat a fragmented platform and infrastructure. And Phil mentioned data. It is one of the very critical elements of being successful in the digitalization process of any activity, and in banking in particular. So we actually spend a lot of time really understanding what the client's needs are. So really, really driven by a client-centric, design-led process. And from that deriving, clients' journeys, underpinning investment processes and underpinning data framework. Otherwise, obviously, and that's so absolutely critical to making the client experience valuable, because to your point, if the data is not clean, if the data quality is not there, if there is not a coherent investment journey from the point of profiling your clients to the point of delivering a portfolio review through portfolio constructions and portfolio monitoring, then obviously you're not delivering to the client's expectations, because you're still there to advise and to provide quality advice. So I would say really the ability to look at the journey end to end and translate it into actually a business capability map and underpinning data framework is really critical in being successful with digitalization of the processes. So it's big undertakings, I suppose, for organizations such as ours who are operating across platforms.
Cara, what do you see? You have access to the entire market, I think not just in the UK, on a global basis. What do you see there in terms of connectivity, different systems, in-house versus buying off the shelf?
I think the first and most critical issue is that it's never one and done, right? You're never finished. I mean, it's good for Muriel because she has a job forever. But there is no create your platform and sit back and you're good. There's constantly going to be some kind of innovation that comes out that makes client reporting better attribution analysis, better, there are new investment products. So how do you incorporate that into a system so that either your in-house folks can better manage portfolios or your client base can better understand their portfolios? It literally is just on such a fast track of new changes and new technology coming out. And the issue is, it is all very piecemeal. There is really no great provider that does end-to-end. In the States, you might say it's like an InvestNet. But InvestNet has loads of pieces that are really crap and really old. But if you want a plug-in, that's probably going to be the easiest one, right? So if I'm a smaller, IFA equivalent, so RIA in America, I'd probably use an InvestNet because it's plug and play. I can run my business. I'm good to go. But they have loads of pieces that are really old and outdated and really aren't going to keep me up to speed. It's going to be the further up you go into the private banks and the higher amount of cash that you have that you can implement. That's where you can say, okay, we can create something in-house that kind of ties it all really nicely together. This piece actually doesn't meet our needs, so we will design our own thing to do that. And then they can also have the ability to change a lot quicker. I think that's where the size does matter, and the bigger you are with a higher amount that you can invest really does make a difference.
Phil?
Yeah, I mean, I now come at it from the small IFA. I guess we run 1.5 billion assets, but we're no HSBC. So for us, we're less able to do the straight-through processing of having your own platform. So much we can do it on our own discretionary, but when we're using external third-party managers, that doesn't work so well for us. So you've got an interesting trend with digital. There's one thing which is digital transformation, which is making everything straight through processing and easy and seamless for the client and in your back office. And then there are just points of digitization, whether that's turning your forms digital or the like. But really for us, I think talking to our clients, they might have 5 or 6 different asset managers, running, millions of pounds each. So what is it they're looking for? So when we talk to them, they talk about aggregated reporting. They talk about consolidation. And so, again, it comes back to that data point and who owns the data and how do we get to a position where everything can be reported in one place seamlessly. Now, I think an unpopular position that many firms take is they own the data and they'll put their arms around it. But data nowadays is owned by the client. It's their data, not our data. And therefore, I think we all have to embrace integrations and the advent of open API and open banking and be able to share that data and let different organizations tap in really to the information that we hold and start making it more seamless and easy. So certainly in our back office systems, and we use a firm called IntelliFlow in the UK, there are open APIs. There is an ability to link through to a risk profiling tool. There is an ability to link through a cash flow modeling tool. Yeah. And I think from that perspective, you can go out and say, who's the best at doing this? To your point, Cara, and say, I'll use them, but how do I now integrate it? And APIs, for us at least at our scale, is the answer to that, because we're not going to have the funds to be able to develop our entire own platform. That's just not feasible.
And you also just touched on something that just reminded me as well. I mean, you mentioned earlier that you want to go after, or you're now being exposed to that next generation, right? So it's Gen 2, Gen 3. And they're making investments in very different ways, right? So they're out there doing crowdsourcing, they're on seeders, they're throwing a couple grand here. How do you consolidate that? And that's what's been, I think, if you look in Asia in particular, where people are really quite hesitant to give their advisor insight over their entire wealth, right? They like to piecemeal it. Like you can look after this money, you can look after this money. And you do see a lot of FinTech developing that is really trying to consolidate that. So that says this 25-year-old with a lot of money that's off making investments via friends and various, again, apps and things, they're able to consolidate that and then provide that information back to their advisors. And the question is, does that investor want that to even happen? But you do see a lot more acceptance and saying, yeah, actually, it is quite helpful to have somebody else keep hold of it because I don't really know where I've been spending all my money. And it's good for them to see what the returns are.
Yeah, and data aggregation is definitely probably on the very top of what clients are looking for these days, in particular the top end of the client base. And very often clients are telling us, can you get the basic rights, actually? So coming back to the importance of data quality, before you even go into more sophisticated capabilities, which are very much value add, stress testing and scenario analysis and so on and so forth. Can we get an accurate reporting on portfolio positions, portfolio valuations? Can we have the ability of aggregating data across, in some cases, booking centers, but also potentially with externally held assets. And so the importance of the foundations and doing the basic things right is really most often what clients are looking for in the first place, because it's actually not always there.
Yeah, just the last thing I would say is on there, to your point, Cara, about what it is that clients want and how they want to interact. It's interesting when you look at how regulation has changed. You take old wealth management and say, oh, someone wants to top up, they've got their bonus, they want to put their money in and invest it. And it used to be, in the advisory world, you had to do a letter that said, oh yes, thank you very much, you want to take £100,000, you want to put it into this portfolio or whatever else. I mean, certainly when I talk about, again, Gen 2, Gen 3, they go, well, I know what I wanted to do. I'm quite happy to just do it, press a button and put it in. I don't need you to write me a letter, right? And add a week into a process whilst, I sit in cash, whilst you write a letter to tick a box to tell me what I already wanted to know. So now suddenly, again, we're engaging with tech to say, well, is there a way where you can get that streamline all the way through? Is it AI using Wealth Wizards or whatever it was up on the screen, or Avaloq or whoever it may be, where someone knows what they want to do, they can do that, and you allow them to do it, and they should be allowed to do it. It's their money. People can make their own decisions. We've got to make these things easier and think about what's important to the client, because they don't want to sit there waiting a week for a letter saying, I'm putting some money in an ISA.
Yeah.
But it's important, the ISA.
But it is important, the ISA.
In particular, if you do it every year over 20 years, then
Sure.
you can have a nice pot. We have some interesting questions here, and I think I would like to kind of start addressing them. One question here, which is kind of a little bit related to that, and is also kind of dear to me, which is, how can we help wealth managers use technology to encourage more people to invest and not rely on savings and pensions for the future? It's one of the things I also do as an academic, that to show that what is the importance of investing, saving, that wealth management is not just investing. Wealth management has this kind of financial planning aspect, that you look into the future. What do you think? So I see it as educational, but I would like to hear your views. How can we use technology to encourage people more to kind of embrace investing? Because a lot of people still sitting on cash or not being totally efficient. Who wants to kick off? Perhaps,
I'd
Cara.
say make it easy, right? It's to that same point, right? Nobody wants to reach out to a financial advisor and then wait for a letter and set things up. I mean, you basically need a quick touch point that somebody understands. Even, £10, £10 a month is going to make a difference. So I think technology is critical back to the democratization of wealth, particularly in middle and lower income, the mass affluent, right? There I think is where technology is going to really make a change, where people hopefully will have better outcomes than they currently do, right? Because we have a massive retirement gap. I mean, there's a massive retirement gap. And a lot of it comes down to, yes, it absolutely is education, but it's also simplicity, right? So again, younger generation is really quite comfortable doing a lot online, right? There's no reason why they shouldn't kind of get, okay, they're not probably in positions to get $100,000 bonuses, but they may be in a position where they just got a £2 raise an hour, and that they understand that their life wouldn't change that much with that £2 raise. So maybe they do £1 goes into their savings. It is absolutely about education and using technology to make sure that people get that. And it's things like, there's like kind of the nutmegs of the world. That's kind of saying, give me a little bit of a little pot and we'll invest it for the future. Make it a little sexy, make it a little bit more fun to do. Gamification, I think, will really make a difference, and that's all technology.
Yeah, so I would echo that through technology and digitalization, you're forced to rethink your process, and that is the beauty of it as well. So if you digitalize your investment process, you have to rethink your investment process, and you have to force to actually simplify it, make it coherent, make it consistent end to end. And actually, you mentioned the Aladdin implementation. When we introduced Aladdin in the private bank of HSBC as our core portfolio management module, we had to completely re-engineer our investment process end to end, from the point of client profiling to the point of delivering portfolio reviews and constructing portfolios. And it has forced us to simplify the process, make it very clear, very consistent, very coherent. And there is an element of education in it. So actually, we did work with Mercer in relation to reconstructing the investment profiling. How do you go about engaging with the clients, talking through their investment preferences, talking through their risk-return objectives? Which techniques do you use to make it very tangible to them as well? If we talk about risk rating of customers and we talk about a risk appetite, what do we mean? What do we mean beyond the number 1 to 5? What does it mean in terms of what you're prepared to lose in the context of your portfolio? What is your maximum drawdown appetite, and how you can use all kind of technological elements to make it more palatable, more tangible. So technology is very much helping rethinking your processes and simplifying the processes, and actually it really helps and support the education process much more than where we were years ago, when we were mainly paper-based, and also much more product by product driven, when now we're really thinking about the client's wealth holistically in the context of their portfolio and in line with clients' investment preferences and investment objectives.
Yeah, I mean, I agree with all of that. I think almost we have to go back one stage even before that, though. So certainly as a firm, we now go into schools. We support initiatives from Chartered Insurance Institute, going into schools to educate children really around the basics of financial planning. When my daughter's about to leave school, she has no real awareness of, aside from what I've told her, credit cards, budgeting, go to university, how to balance her rent, all of those sorts of things. The concept of going away and saying, right, I'm going to put some money into a pension, completely alien to her, right? So I think we have to really, as financial institutions, go back and say, we have a huge role to play as educators. We have to remove the jargon and the complexity of TERs, OCFs, all of these things. I mean, who comes up with this stuff, right? I mean, it's all important that somebody knows what they're paying, but really the principle they need to first get is I need to do something. And better to have saved something even with charges than not to have saved at all. So I think education's where certainly we think we've got to start. And then as part of that removal of jargon and simplification, I think visualization is really important. So people need to understand what it is they're saving for their retirement or for their house or education, whatever it may be. So helping somebody visualize and seeing a range of potential outcomes for doing that, I think is important, because to the other points around risk, volatility, all of those things, it helps bring that to life. Because again, trying to talk to my daughter around drawdowns, good luck. And she's bright.
Yeah, I have 2 kids, and I have very similar experiences, and they're even older. So we have another interesting question here, which I think kind of feeds nicely into that, which is about AI and how AI might pose a threat to employment. The question here is, will increasing use of AI mean fewer people working in asset management, and probably asset management, wealth management? Of course, asset management is much bigger because it's institutional. It's the big brother of wealth management. But do you have an opinion on that?
I do.
Is that threat? Are we going to see less people or more people or other profiles?
So I think it's just a change. I don't think it's necessarily a replacement for me. Certainly in the client space, I do think you're always going to want a trusted advisor in the high net worth or ultra high net worth space. But you are going to get efficiencies through AI, absolutely. But I still see technology as a support to the advisor. So the advisor is using technology. It's not technology necessarily replacing an advisor. As I mentioned earlier, you might see the democratization of wealth with technology making actually wealth management more accessible to the mass affluent. So people who have been previously unable to access advice will be able to get it because of technology. But I think technology just improves our ability to deliver advice. And ESG is an interesting thing there. Suddenly you've got sustainability, again, a huge amount of data out there. So are we as individual humans going to be able to sift through all of that data to come through to there? Really, I'm going to need AI to help me with that, not hiring 100 people to sift through, all company statements and scores and so that to me is where AI comes in to support rather than replace.
No, I agree with that completely. It's about, obviously with digitalization comes access to data. Too much information kills information, too much data kills data. So really AI is the way through which we can actually continue to provide, customize access to information, customize access to investment content, and customize advice Otherwise, again, we're not meeting the client's needs. They don't want to receive tons of data. They want to receive data which is relevant in the context of their preferences, their portfolios, and really their interest. So clearly AI is very powerful in that context. And yes, through digitalization, you aim to enhance client experience. You also aim to achieve operating model efficiencies, and that's a clear trend as well. So with digitalization comes an ability to lower your cost to serve, which is obviously critical in the retail space if you want to be able to deliver a very good service in a cost-effective manner.
I absolutely adore AI. I think when it comes to investment management, I think it's critical. I think it's a wonderful thing to see the amount of portfolio managers that are trying to figure out how to incorporate that into their process to assess what's valuable when they're looking at investments and what's not. So for me, I'm really hoping that it means better outcomes, better returns. And when we're looking at, so when Mercer's looking at investment managers and we're trying to assess who the best portfolio managers are, for us applying AI, what are the questions that are relevant? Are we asking the right questions? Are we looking at the right things? We've been doing it pretty much the same way for 40 years with tweaks here and there. We're not sure whether or not it's really important, whether or not a team's been together for a certain period of time. AI provides us that insight, so we'll get better. And yeah, so I think it's an absolute game changer. And yes, it provides efficiencies, but and efficiencies always, people go, oh well, that means getting rid of people. It doesn't necessarily mean getting rid of people. It means sometimes getting to decisions faster and better, and then you can use people to do more value add work, because a lot of this stuff isn't necessarily value add for a human to be sitting around doing it.
And it creates other jobs at the same time.
Yeah.
It's just a different sort of job, right? It's not the traditional one. It's it's the person who's working the algorithms. It's just different.
Data curation. I mean, jobs that didn't exist, or certainly none of us in our generation have ever heard of, right?
But it's also, I think, to that point, enables us to expand the universe that we're providing advice on. So alternative investments are increasingly of interest, certainly in the high and ultra high space. So again, if you're going to expand the universe, you need people either to know about that universe or be able to study it effectively in some way. How you make sense of cryptocurrencies or anything else, I'm not quite sure, but someone I'm sure will get to the bottom of that.
Yeah, I think this is a very good point, because obviously the digital started really with the core asset classes, and so we need to expand upon when we look at advising across segments. It's the ability to cover all asset classes, the most complex products and services as well. Is very critical. So incorporating alts, incorporating structured products in your overall digital advice is key. So it push up the skill set as well. Yeah.
I think we have 7 minutes left. We have lots of very interesting questions. I would like to pick one, and after that one, then perhaps a final round where we give an outlook. This question here that I noticed here, I think is quite interesting, is again related. It's about the cloud, and it's whether the cloud is the answer to dealing with the system legacy, or whether there are potentially other solutions, other alternatives. So it's a very techy question, but we have very techy people here on the panel, so perhaps you can tell us your view on cloud versus non-cloud, other alternatives, what you see out there. Or is it too early?
No, I'm not a cloud specialist, just disclosure, but we so as part of handling the challenges with legacy platforms, fragmented platforms and ecosystems, our business architects and data architects are definitely working with our providers in shifting some of our solutions into the cloud. So yes, I believe it's going to be one of the answers to helping us bring the ecosystem and our architecture together to deliver a seamless experience end to end in relation to data management.
I just wonder, I think the cloud has been critical to modernize and to get things off of sort of Excel systems, and you had to send people updates and things like that. I don't know, honestly, if in 10 years the cloud is going to be terminology that we even use anymore. We sort of look at how blockchain, which is such a logical thing, has sort of come about, and everyone's like, oh, right, blockchain, that's so modern and interesting, but it's really logical. I don't know what the next really logical thing is that none of us thought of. I'm not sure it's the cloud, but it's critical for now, and it's been critical for the last 5 years.
Phil, an opinion on that? So that's again related a little bit to crypto, to blockchain, which is not crypto as we know, but it is kind of related. But it's early days in my view.
Yeah, I mean, to be honest, I don't have much to add. Clearly, again, you look backwards rather than forwards sometimes and say, well, going through COVID, how easy was it to actually operate? If everything was based on servers in your office and suddenly you've got a remote workforce, what then? So to me, simply cloud for now is a way forward, but again, you do have to already be looking forward to what's the next thing.
So we have 4 minutes, 5 minutes left. Let's look into the future. Where do we see the industry going? From a UK perspective, perhaps, and also perhaps from a global perspective of Europe and the world, and we're a global world. Who wants to kick off?
Oh, I get to go first. I think wealth management is a incredibly exciting and interesting industry. It has a tendency to feel stagnant, but I think that there's a lot of innovation and interesting things happening in our industry now that is going to make it a great place for people to work. And I think we can really impact future outcomes. And again, I'm really keen to see the changes in retirement and just financial outcomes for less privileged people, right? This isn't necessarily about the ultra high net worth anymore. To me, it is about how do we, you look at Goldman Sachs and Marcus, right? Everybody's starting to go, well, mass affluent is interesting. And if we get enough of the mass affluent, then we can start actually being pretty profitable. More importantly for me is I like to see the changes that's going to happen to the mass affluent because they really haven't been tended to, or they've been grossly underserved. And I think with technology, that's going to make it a lot more interesting for the HSBCs, the cities, all the big boys to really start to look at that group and say, okay, yes, we can make money off of them, but the outcomes are going to be actually positive for those communities.
Yeah, I agree. I think the mass affluent space is a very interesting space. It's probably the most underserved actually in some ways as well. Obviously, there's been a lot of focus on the high net worth segment. I think there is a lot that can be done in the mass affluent space as well. It participates to the democratization process we've discussed and the education process we have discussed as well. Digitalization will have a key role to play in this. It will continue to accelerate, I think, for the greater benefits of clients. It will help, delivering, good solutions at scale, which is also a very important element. And I think it will also force us to become, much more focused as well on data. I can't stress that enough, because now that you expose your data all, live, actually, immediately accessible to clients, you have to be extremely diligence about what it is you're displaying, how you're displaying it, and making sure it's done in a very targeted, customized way. Otherwise, the benefits of the digitalization will be lost. So I think we'll see it will drive much better quality as well, in my view, in the asset management and investment service space.
So I think, in a way, if people talk about, and I've talked about it, accessing for the mass affluent, I actually think that's going to be far slower, personally, than people expect it to be. We've seen people come into the space, even the UBSs, and then come back out of the space, and now you're back into the space on there. And you look at Nutmeg, I think even 2 years ago had whatever it was, 100,000 customers, versus at the same time the Lloyds banking app having 4 billion clicks. and you go, right, there's a bit of a difference there, and what is it that's going to make people suddenly rush to that space, unless you have the education again that we mentioned before. So I think it'll probably be slower than we expect it to be. It's the right idea, it's a great opportunity for everybody, but I think there are some underlying things that will probably stop it happening as fast as many people want it to. I think trend-wise we are going to see further developments in how we all interact together, and I suppose the obvious ones there, I think yesterday you had announcements, I think it was from Microsoft, how they're going to challenge Meta or Facebook as how it was, how we're all going to be meeting with our clients or internally. Are we going to be sitting there with VR headsets in a virtual office, or are we, with our own avatar that, its lips move when we do and it does gestures? That was yesterday's news that came out, what Microsoft's delivering to challenge, Meta. So I think there's going to be a change in the way we work as much as there is what it is we're trying to deliver.
We're spot on, I think. We expired, our time has expired. Thank you so much for your insight, for your contribution. Thank you to you here in the audience and of course online where you followed us. Perhaps a round of applause for our speakers and